Okay, it's a brand new day and there's plenty to talk about. So many stocks on our radar. First up, we have our entire research team is joining in, so let's welcome them on board. Good morning, folks. There are some very interesting changes that have taken place. The MSCI review has come through of the Adani group, and of course, there's the Q3 numbers of Adani Power as well. As always, Vivek is here to give us a lowdown on all of that. Vivek, over to you.
Well, good morning. So on Jan 28, keeping in line with the heavy news flow as well as the volatility seen in the share prices of the Adani Group stocks, MSCI had invited feedback from market participants as well as the members to actually give feedback on the treatment of Adani Group stocks within the MSCI indices. So today, today is also the day post-market hours. Today, you're expecting the results of the MSCI India Index review. So what MSCI said is that they would now be, after getting the feedback, they would now be reviewing the treatment. And as per analysts, they expect the weightage of Adani Group stocks that are present in the MSCI Global Standard Index to be reduced. Now, why is this important and what is the quantum? Remember, all of the Adani Group stocks, barring Adani Wilmar as well as NDTV, are part of the MSCI Global Standard Index. And on Jan 28, the weightage of all of these stocks was quite significant. So you will be expecting an impact, especially if there is a weight reduction happening through. Which are the three stocks that have the maximum weightage? Adani Enterprises, Adani Total Gas, as well as Adani Transmissions are the stocks that have the highest weightage from the Adani Group, the MSCI Global Standard Index. And as you mentioned, Adani Power will also remain in focus on the back of slightly muted results that the company gave post-market hours yesterday.
Okay, all right, Vivek, thanks a lot for that. Well, Sonia, in the final minutes of trade, actually, we got the numbers of Escorts. They looked a little disappointing on the margin front.
Oh, absolutely. It's the third quarter now of disappointing numbers from Escorts, and I expect the stock to be deep in the red today. Very weak margin performance coming through. It's a 560 basis points knockdown in margins at 8.3%. And in the main segment, which is their farm equipment or their tractor segment, the margins have fallen to 8.3 versus 15% same time last year. Now, the company in their press release says that the fall in margins is because of A, unabsorbed commodity price inflation, and B, delayed price hikes. So all of that put together has hit their margins. They say that inflation impact may take some time to normalize. So perhaps even in Q4, they could see a hit over there. The net profits were also hit by an exceptional item of 53 crores due to impairment of an investment in the JV Tadano Escorts. So all in all, I'm going with red. Revenue growth was not too bad, actually, 15% growth over there. But it's really the operational performance which has gotten hit. As you can see on your screen, EBITDA down over 30%. And the agri-machinery segment has been hit very hard as well. So going with red. But let's go across to Mangalam to find out how Trent's numbers look this time. Mangalam.
Well, you spoke about an operational miss in Escorts. I would say the same for Trent as well. Revenue growth, no problem. In fact, the company has reported its highest ever quarterly revenue year on year on a low base as well. We've seen a 54% jump in the company's top line. However, gross margins have contracted by about 300 basis points. Remember, there were rent waivers, etc. last year. Now they have to go ahead and pay the full rent and increased operational expenses as well, as a result of which margins have compressed by 430 basis points and the net profit has been impacted. However, what supported the net profit is other income coming in at 61 crores versus 30 odd crores. West side, out there, we saw 17% same-store sales growth. That's good. However, Jeffrey says concerns persist around margins, urban slowdown, as well as valuations. And as a result of which, they have a hold rating on the stock with a target price of 1400. Because of valuations and margin concerns, I'm going with the red.
All right, Mangalam, thanks very much for that. Now, Cummins and Honeywell are the next two stocks on our radar. Vahishta is here with more. Vahishta, hi, morning.
Hi, good morning, Prashant. Let me start off with Cummins. Excellent set of numbers coming. In fact, the company has reported a record quarterly performance, which is driven by a strong domestic as well as their export revenues. Now, if I do an analysis of just the basic numbers, the revenues have come in at approximately 2,100 crores, which are 12% above the estimates. Also, the margins have jumped 330 basis points, which is above the estimates. The export revenues are higher by 23% on a year-on-year basis, while the domestic sales are better off by 27% on a year-on-year basis for Q3. The company has said that the demand momentum which was witnessed in the earlier quarters have continued even in this quarter. Also, there is a strong demand from the end markets like data centers, from healthcare, from infra, from the commercial real estate, etc. In terms of outlook as well, the company is quite optimistic, and hence I'm going with a bright green on the stock for today. But the next stock, which had also released their numbers yesterday post-market, was, as you mentioned, was Honeywell Automation, wherein the numbers have been a mixed bag. The revenues have jumped by 18%, by margins have fallen to 12.8%, which is the lowest in the past 3 years, which is also below Nomura's estimates of 18%. Now, this comes in as a major surprise, despite a sharper than expected ramp up in sales. I'm going with a red on the stock.
Indeed, Honeywell, those margins are disappointing, though there's a ramp up on the sales number. Let's see how that one reacts, should be in the red today. But let's hop across to Ekta. She's joining in to tell us about a few pharma-related stocks. Morning, Ekta.
Thanks for that. I'll start with Piramal Pharma. It's a clear disappointment which has come through for Piramal Pharma. They have approved a rights issue of around 1,050 crores, but just look at the numbers. Revenue is up 11.5% year on year, but the margins have come down to 5.1% versus 14.7% on a year-on-year basis. Loss of 90 crores versus a profit of over 160 crores. And on a Q-on-Q basis also, the margins have halved by around 500 basis points, and the loss has widened as well. So clear red on Piramal Pharma today. JB Chemicals, I expect that stock to be in the green. Revenue up 32%, margins have improved marginally, and a profit of around 26% in terms of a growth. Domestic formulations was up 42%. Even if you exclude the acquisitions, it was up in mid-teens. Contract manufacturing business crossed 300 crores for 9 months. Narayana Health, strong performance. Expect the stock to be in the green. Revenue up 17.5%. Margins have improved year on year as well as Q on Q. And the profit of 153 crores compares to 97 crores on a year on year basis.
All right, thanks a lot for that. Well, those are a whole host of stocks. But let's find out the latest on Oberoi Realty. Sonal has the data for us. Sonal, how did it look?
Well, as far as the reported numbers are concerned, they were aided by their rental income and mall income as well. So if you look at the P&L, revenues were up 96%, EBITDA was up 183%. Margins also, they expanded considerably to 57.7%, leading to a profit growth of 50%. And as I said, it was aided by their mall revenue and hospitality revenues as well. Some revenue coming in from the commercial segment. However, if we look at the residential segment, that did see a decline. We had reported it earlier as well. Area booked was down 65% on a YY basis. Value was down 67% on a YY basis. So yes, the residential segment did not do well. The outlook, however, in terms of launches is very positive. So on the back of that, the stock will be in focus today.
Okay, all right. Sonal, thanks a lot for that. Well, Abhishek joins us to tell us about Piramal Enterprises. Abhishek, disappointing set of numbers yet again?
Well, the numbers are all over the place and very, very difficult to understand. How can a gross NPA in absolute value rise by 93% quarter on quarter and the gross NPA ratio rise by only 30 basis point quarter on quarter is a phenomenon that I have not seen across any lender. So AUM growth is just 1.7% quarter on quarter. They had a disbursement of 5,100 crore, but the AUM growth is only about 1,100 crore. The revenue is down 7.5%. Despite that, the net interest income or the net interest margin as well has seen growth both YOY and quarter on quarter. So it's the cost of funds which has actually aided this time around. Tax write-back of 3,432 crores has helped in their profitability. So profit after tax is at 3,545 crore, which compares to a loss of about 1,537 crore in the previous quarter. As I said, gross NPA value-wise has increased by almost 93% quarter on quarter. However, the ratio, the gross NPA ratio is at just 4% versus 3.7% in the previous quarter. They have also written in their PPT that they have written off NPS worth 771 crore in this quarter, and they have one non-RE, that is non-real estate player exposure of about 1,900 crore. 1,255 crore has not been categorized as NPA, and they are looking to resolve that. So stress has actually built up in Piramal Enterprise financial side. Back to you.
Okay, well, strange things happen, right, these days. Thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow today. There's Cummins, India, JB Chemicals, Narayana Hrudayalaya and Oberoi Realty, while stocks with negative news flow, Adani Group, all the Adani Group stocks, Escorts, Kubota, Trent, Honeywell, Piramal Pharma and Piramal Enterprises. But the other big headline we're tracking is what's happening in the world of crude, because it's been 3 days running now that crude has been moving up. Brent crude, in fact, is now at $85 a barrel plus. Manisha Gupta is here to give us more of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, absolutely. After 7% of decline in the previous week, this week we've seen prices gain up by almost 6.5% already, and $85 per barrel is holding. The markets are looking at the U.S. crude stocks, which have continued to rise for a 7th straight week. Now we are at 2020 high, so that is what is keeping the prices in check. But on the other side, the demand estimates are clearly on the higher side. With Saudi Arabia hiking Asia market prices for the first time in 6 months, tells you that the demand is coming back. There are higher demand estimates coming in from China, and then there are supply concerns from Turkey still on the suspended operations at Ceyhan. Also, BP's Azerbaijan now has declared force majeure on Azeri crude shipments. That also adds to the premium. There is a shutdown on oil field in Norway. So various of these supply concerns are keeping the prices higher. The markets will now watch out for the China's CPI data that's releasing tomorrow, and the markets are anticipating a 2.2% of number on that.
All right. We'll take a